this particular question, another very beautiful question and very beautiful concept that we have to learn in this particular question. Now that way it's a routine question, very routine adjustments, but it has one very good concept. Let me first of all explain that particular concept to you. So thereafter your entire question solving will also become very clear in your mind. First of all, this is a partnership firm with 3 partners. All the partners' data is given, interest given, remuneration given, everything given, profit as per P&L given. So you can start with straight away profit as per P&L, add total interest, total remuneration, all other adjustments. That way it's a routine question. It's not that great difficult question, but that concept I want to come to. Okay. Now if you say that you have required to compute total income and tax payable, so you can do that calculation, and you are required to answer if there was any carried forward depreciation if it was 2,88,000. Now this is a real good point that has to be attacked very properly in this particular question. Now for this purpose, first of all you need to understand the definition of the word book profits. Okay, the word book profits, based on which you are doing all this calculation of the partner's remuneration. So after interest, remuneration adjustment you are doing. Okay, now if you see all these limits that you are calculating on the first 3 lakh rupees of the book profits everywhere, 1,50,000 or 90% of the book profits, everywhere it is referring to book profits. Okay, because entire calculation is based on the book profits. Book profit is already explained that to you. It is a income tax profit, our business income profit as per the computation methodology of the business income, that book profit gets calculated. That's very, very fair enough. Okay, but now let's do a little bit of a technical understanding of the book profit. Okay, now book profit means it is a net profit as shown in the profit and loss account of the relevant previous year, computed in the manner provided as per this chapter. So it is computed in the manner provided as per the provisions of this chapter, and this chapter is none other than your business income chapter. Okay, now business income chapter, if you see the group of sections, that is called as 28 to 44. This is a group of sections, okay, under this particular chapter. So after considering all the provisions of 28 to 44, whatever profits that you get as per the income tax, that is the profit, what we call it as a book profit. Okay, now increased by the aggregate amounts of the remuneration paid. That means you have to disallow the remuneration. That means before giving the remuneration deduction, this should be the profit. This should be the profit immediately before doing the remuneration adjustment, and that is the reason we logically conclude that book profit is that profit which is after the interest adjustment but before the remuneration adjustment. So when it comes to the partnership firm, the last adjustment is remuneration and the second last adjustment is the interest adjustment. This is how we understand, okay, in terms of computation. Now if you see this in a little bit more conceptual manner, as per the provisions of this chapter, which is 28 to 44, that is a business income chapter, this group of section number includes the group of section number 32, and it includes the subclause 32, which is a carry forward set off of the depreciation. Okay, so in the given circumstances, if there was any carry forward set off of the depreciation, brought forward depreciation, which is actually under section number 32(2), and that comes in this particular chapter category, that means you have to adjust the carry forward depreciation for the purpose of calculation of the book profits. That is one of the point. Okay, the second point is, in the carry forward set off, always the first adjustment is done to section 72, that is, our business loss is to be always set off first, and the second, if any, you have to do 32(2) depreciation adjustment. So this is specifically provided that for the purpose of set off, you have to first adjust section 72 losses, if any, the business losses, if any, okay, and then only you have to do 32(2). Now this concept will create a problem. See, this concept will create a problem. How it will create a problem and how we will solve that problem. Both the things. I'll tell you the problem also and tell you the solution also. Okay. Now, supposing if you calculate a book profit, the book profit is, say for example 100. Okay. You have a carried forward business loss, that means 72 is 20. Okay. And you have carried forward depreciation 32. If both you have, then is a problem. If one of them you don't have, there is no problem. Okay. So 30 to 2 is, say for example, you have 90. Okay. This is what a carried forward figure. So now we have to do a notional calculation. First I have to adjust how much out of 100, 20. Okay. So after doing section 72 adjustment, my profit will be 80. Okay. So out of 32 to carried forward depreciation, which is actually 90, but I have only sufficient profit to the extent of 80. This is a notional calculation. I repeat, this is not an actual calculation. This is a calculation done only for the purpose of book profit calculations. I repeat, and this is the major confusion that the students will get even after solving the answer. This is a working which I am doing as a working note, which is in my back of the memory. That first I will set off 72, and thereafter remaining profits I will use it for the purpose of depreciation adjustment. And how much is carried forward depreciation? Because I can do set off only if there are sufficient available profits in the current year. If I do not have sufficient available profits, I cannot do that particular set off. So I will do 80. Okay. Now for the purpose of book profit, I can consider only 30 to 2. So 30 to 2 eligibility comes only 80. So my book profit calculation will be updated after 32 to adjustment. It was 100 and now it is going to be minus 80. So my book profit adjusted will be 20, and based on this 20, I will do all this calculation. Okay. I once again repeat, this is only a book profit notional calculation. I repeat, this is only a book profit notional calculation. Okay. The actual carry forward set off will be done only after you do partners remuneration calculation and thereafter. Because I can do set off only on the net business income, and the net business income I will get only after the remuneration. Okay. So based on this particular book profit, then I will do the remuneration adjustment. Okay. Thereafter I will get a net business income, and from the net business income I will do the actual carry forward set off. So this set off which I had done was, as I already told you, was a notional working. It was like a rough working to arrive at the book profits for the calculation of the remuneration. And if I don't do that, then I cannot get the book profits, and if I cannot get the book profits, I cannot get the remuneration. If I cannot get the remuneration, I cannot do the actual set off. So there is a vicious circle of the law. However, it has to be broken by this suitable understanding and concept. Okay. So this is something which is going to come in our way in this particular answer. And when we will develop the actual numbers, you will realize that how the updated calculation of the book profits will have to be carried out. Okay. So now let's go directly to the numbers, and thereafter I will show you how this 288 is going to affect your answer. Okay. Now see, in this particular case, they have already got some carried forward business loss and long-term capital loss. Okay. Now since you already have a business loss, and now you already have a depreciation, you have both of them, that means you have a problem. If any one of them was not there, then probably you will not face a problem. You have both of them, you have a problem. Keep that in mind. Capital loss will not come in our way because that is going in a different head altogether. But it is there. We will keep it in our back memory. Okay, now straight away let's start with the computation quickly. Okay, profit as per P&L 256. Okay, first I will do only without that depreciation adjustment. So first let's finish the routine thing very clearly. Okay, profit as per P&L is 256. Okay, now I will do all the adjustments. Firm has completed all the formalities. Okay, what is the meaning of this point number 1? That section 184 conditions. Okay, that in the first year there should be a document, the share should be determined. So all those conditions they have said. That means our section 40B eligibility is fixed. I mean, like this it is trying to say. Firm satisfies all the conditions of ATIA but is not found to be eligible. So not found to be eligible, so forget ATIA, we will not give. Point number 3, partnership deed was amended on 1st April, providing remuneration interest as under. So on 1st April, so that period will not be a problem. Remuneration is this figure, interest is this figure, it is 20%, 24%, don't forget this is 24%. Okay, so total interest first of all we will add completely. Then it was 20%, so 12 by 20 multiplied by what is paid to Patel. that much will be eligible for 40B. Similarly, we'll have to do for Malhotra, we will do 12 by 24 multiplied by the Malhotra's interest. Okay, remuneration will be subjected to overall limit, whether they are working partner, not working partner, any such data given, not given. Otherwise, you have to write the assumption that they are all working partner and accordingly. Okay, depreciation eligible under income tax work out to 96,000. Okay, so first of all, book depreciation at tax depreciation less. Okay, so we start with 2,56,000. Add what is the book depreciation is 1,80,000. So add 1,80,000 minus 96,000. Okay. Under the miscellaneous expense, 82,000 are inadmissible expense, not allowable, out of which 60,000 were donations given to the approved charitable trust. Okay, so for this 60,000 approved charitable trust, you will get 80G, so that you have to just keep it in our back memory, but that is only after deduction under chapter 6A. Okay, so that will take care, and 82,000 is not admissible, so I am going to add 82,000 straight away. So add 82,000. Okay. Then 2 years back, the firm was assessed to business loss. This is carry forward set off that will come in afterwards. Keep it in our back memory. Partnership deed contains the clause for allowance of partners' remuneration and interest as per the provisions of the Income Tax Act. So this is one of the very good point. See, the partners' remuneration and interest as per the income tax. So this is also a very valid way of drafting the partnership deed. There is nothing wrong. And as per income tax, it is permitted. So no problem. This is partnership deed contains all this stuff. That means authorization is there in the partnership deed. Point number 8. The firm has borrowed monies on account of loan and its outstanding at the year end is 3 lakhs from Mr. M, a money lender. Okay, so one of the point is this is a loan transaction and it is from the money lender, so that's okay. Explain the tax obligation associated with outstanding loan. So whenever there is outstanding loan and all that, section 68, 69 provisions comes into picture, that it should not be bogus, documentary evidence, creditor from whom you have taken the loan, its creditworthiness, it should be genuine transactions, and all the situations will be explained here. Okay, and what is a money lender? So it is a genuine loan. This is what it is indicating. So in English, we say money lender and the name lender. Okay, so if the question is the word name lender, that means it is a bogus transaction. So you have to straight away go for section 6. I mean, just telling you the words. Okay, so here it is saying money lender. So you have to say that, oh, it is all genuine and all that kind of situation. And secondly, for loans and all that, there is some penalty clause if it was taken in cash or something like that. So you should ensure that that should not be any cash transaction, because it is not given to us whether it is cash or account pay check and all that. So all these explanation you have to give, because tax obligations associated with outstanding loan. Okay, so all those summary notes you have to cover it up. Okay, so all the points you have taken care. Okay, now 1,80,000 we have added, all these we have already added. Okay, now let's go to the straight away profit and loss situation. On the credit side, GST collected 30,000 from deferral schemes from the Gujarat government. Now, under the indirect tax law, there are many state governments which come out with a deferral scheme. First of all, let me know what is a deferral scheme. A deferral scheme is the current year indirect tax you paid after 5 years, 10 years, that way. Incentive schemes. So you have to pay, but you have to pay it after 5 years, 10 years. Now, in these kind of situations, the doubt will come about section 43B. That means under 43B, you get the deduction only when you pay it. If you don't get, if you don't pay it, you don't get the deduction. Now, in the deferral scheme, generally state governments have these policies. However, some states can have a different, but general thing I'm telling you that whatever is this 30,000 is as good as considered to have been paid. Okay, and it is as good as converted into an interest-free loan given to you by the state because of this particular incentive. Okay, that's a general understanding. The state government notifications should be correctly issued to clarify this particular point. So I assume that there is a state government clarification which treats this 30,000 rupees as good as paid. I call it as a constructive payment. I call it as a deemed payments under section 43B. So assuming that such clarifications from the state government under the indirect tax laws is prevailing. So for this 30,000, what I can say is that because this is already collected, okay, and it is under the deferral scheme, So what is collected is already the income, and it is already included in, sorry, this is excluding. Okay, this is excluding that particular figure. So this 30,000 first of all has to be treated as income. Okay, so add this 30,000 because my sales figure was excluding that, and as per 43B I will give the deduction also. Okay, so this is the adjustment which was to be carried out here. But this 43B adjustment is based on the assumption that appropriate state government notification clarifies that it is as good as paid, and the state is giving you as good as interest-free loan on this particular point. Miscellaneous business receipts. So miscellaneous business receipts, already miscellaneous, but it is business. So I will keep it under the head business only. Now interest on drawings recovered from Mr. Patel. Okay, this 16,000 rupees, which is interest on drawings from Mr. Patel, is income of the partnership firm. See, section 40B. Keep this in mind. One point very carefully, that only if the firm makes the payment to the partner, if the firm makes the payment to the partner, only then 40B provisions applies. Okay, supposing if the firm recovers from the partner, then there is no question of any 40B coming into picture. Okay, so any such recovery is anyway income, so let it be, but it has to be identified as a business income only, so no even head adjustments are required. Now LTCG and debenture interest, so these are basically your some other heads income. So capital gains head and debenture interest, I will say it is other source income. Okay, so I will say minus how much, 4,90,000, but this will be added in the capital gains chapter, and minus 40,000, and this will be IFOS income. Okay, so that particular head I'll have to add it. Okay, so all the credit side I have considered very properly. Now debit side. Okay, on the debit side it is first of all purchase. Okay, so no problem, purchase is okay. Then salary to staff is okay. Interest to partner, add totally 3,20,000 you add, completely you add. Okay, so add 3,20,000, that is total interest to add first of all. Depreciation adjustment you have already done. Remuneration to the partners, completely add. First of all you add fully, thereafter we will check whether it limits and all that and all that. First you add fully, 2,34,000 you add. Miscellaneous expense had some adjustments if any we have considered, but that is all for business purpose. The net profit is this figure which we have started with our computation. Okay, so just take the total here. After doing all this total, I am getting 4,46,000. Just check. Okay, my book profit is 4,46,000. Okay, now from this the interest. Okay, interest now by 12 by 20 and all that. Okay, so it is 30,000. Sorry, 30,000 or 3 lakhs. Let me check. 1 second. 30,000. Sorry, 30,000 multiplied by 12 by 20. That much will be permissible because it is at the rate of 20%. See here, it was at the rate of 20% given. 20%. Okay, similarly for Malhotra you will do 12 by 24 and like that. Okay, so just do the working very quickly. So 3 persons interest is 18,000, 1,10,000. Don't forget that Malhotra was 12 by 24, 42,000. Okay, after this it is total interest is 1,70,000, and after that it is 2,76,000. Okay, my book profits. Now on this particular book profits I will do, because it is less than what should I say, 3 lakhs, so it will be straight away 90%. 90% of book profits. 90% of book profits is 2,76,000. Okay, actual. Now actually you see, I think somebody was working, not working, all that. So Patel is working, Malhotra is sleeping. So only Patel will be eligible and Anand will be eligible. Okay. So they are only 8,500 per month and 6,000 per month. So only these two people will be eligible. 1,02,000 plus 72,000. These are their eligibility, subject to 90% of the book profits. Okay. And 90% is, I think it is somewhere 2,40,000 or something, or some 48, some odd number. And full 174 will be eligible. Okay. So full 174 will be eligible. I'll leave some space here to show some adjustment for the second this thing. Now after 174, my business income is coming to 1,02,000. Okay. From this I will do business loss adjustment. 40,000 and I get 62,000. This is my business income, and from this, to this I will add the capital gains and other sources and all that. Okay. Now come to the main focus. So I've developed these particular numbers very properly. Now supposing if there was a brought forward depreciation. Okay. 2,88,000 rupees. Is that okay? Now this point I want to focus very, very properly. Okay. Now my answer up to this level is okay. After interest is okay. So this is my book profits. Okay. 276,000 is okay. Okay. Now I'll have to do a little bit of a notional calculation. Normally, see, on this book profit I calculated 90%, but now because there is a brought forward depreciation, I'll have to do that notional calculation. Okay. So from 2,76,000, adjust section 72 business loss 40,000. Okay. Balance, if any, will go for the depreciation. Okay. And that is going to be section 32 is 2,36,000. Because business loss is always to be adjusted first, but this is a notional working. Okay, this is only a rough working, a working note, only for the purpose of updating the book profits if there was a brought forward depreciation. So if there was a brought forward depreciation, my book profit will be 2,76,000 minus section 32 adjustment. So it is going to be only 40,000. But this is a notional calculation. This is a set off which I have considered only to get the amount of the book profits. Is that clear? So this is my 40,000 book profit, and when this 40,000 is a book profit, it is 90% of the book profit, that is 90% of 40,000, or 1,50,000 rupees, whichever is more. See, in this particular provisions makes it very clear. It is 1,50,000. Is 1,50,000 or 90% of the book profits up to 3 lakhs, whichever is more. Okay, it is whichever is more. That means up to 1,50,000, there will be no problem. So now your book profit is only 40,000. Your actual remuneration is how much? 1,74,000. But now your limit is going to be, limit of 40B is going to be only 1,50,000. But your actual is 1,74,000. Okay, so you will not get 1,74,000. Because your book profit is now adjusted to only 40,000. So only 1,50,000 you can get the deduction. Okay. So after giving 1,50,000 as the deduction, under this particular situation, your profit is going to be 1,26,000. So 2,76,000 was the actual profit. Okay. But the book profit now was going to be 40,000. However, this remuneration deduction is given from your actual book profits. Okay, that was the limit. Now, one more complication will come. In the personal computation of the respective partners, that actually it was 1,02,000 for one partner, 72,000 for another partner. But your remuneration is only 1,50,000 allowed. So, 1,50,000, you have to break it up in the ratio of 102:72 in the personal computation of the respective partners, because partnership firm, what it has got the reduction, only that figure will be taxable in the hands of the personal computation of the partners. Okay. Now, after getting this 1,26,000 rupees profit, I will do now actual set off. Now, this is the actual set off. So, 40,000 I will do the actual set off of the business loss, and the balance I will do brought forward depreciation adjustment. And in the carry forward set of adjustment, the brought forward depreciation is as good as a current year depreciation. So I will be practically be eligible for the purpose of set off against the other heads of income also when it comes to the brought forward depreciation. So now brought forward depreciation, entire figure I will put to check whether I have sufficient income under the other heads, but I already know that I already have a capital gains income, okay, in the current year. So I can set off current year, because brought forward depreciation is equal to the current year depreciation as per section 32, and therefore current year depreciation is adjustable against long-term capital gains, also adjustable against IFOS income. So I know that I have sufficient other head incomes to set off this particular figure, and accordingly my net business loss will be in the outside column will be 2,02,000 after doing the depreciation adjustment, which I will then set off against the capital gains and other sources as the case may be, and thereafter calculate the tax liability of this particular firm. So this was the main adjustment. Now one more point that you should not forget, but that is ATG that you have to consider here. That ATG working the hardcore basic thing, so I'm not focusing that particular point on this particular subject. And in ATG also there is one of the main point in this particular question, because you have a LTCG, because against the LTCG you do not get the deduction under chapter 6A, so that eligible income for the purpose of ATG also you have to consider it accordingly. If you want, I'll just do that. So in the first situation I will add the capital gains after doing that particular set off, that is 4,80,000. Okay, and I also have IFOS income. IFOS income was 40,000, and it is 5,82,000. Okay, GTI. Okay, so now for the purpose of deduction under ATG, okay, I cannot consider 4,80,000 as my eligible profit. So my eligible GTI income, which will be eligible for ATG, is going to be only 1,02,000. 1,02,000. Okay. And 10% will be eligible. So 10,200 will be eligible. My actual is 60,000. So 60,000 I will not be able to. And of that 50%. So 5,100 I will get the deduction under ATG. Okay. And accordingly my net income will be 576,900. Okay. However, in the second situation, because now there is a depreciation, a big adjustment, no. So again same numbers if I will repeat, add 4,80,000 and 40,000 IFOS income, but set off the current year depreciation, because brought forward depreciation is equal to the current year depreciation. So it is 3,18,000. Now 3,18,000 by itself is LTCG. Okay, so LTCG is not eligible for ATG. So ATG is anyway you are not going to get anything. So my net income is going to be 3,18,000 in the second circumstances, and accordingly I have to do the tax liability calculation, where this LTCG is special rate, and otherwise normal rates of the firm I will multiply and get the tax liability figures on these particular circumstances.